Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, coming to you live from on location. But of course, I know it was turning out to be a pretty soft day, given the fact that we had a pretty subdued start. In fact, the Nifty was below the 26,000 mark in the first half of the session. We, in fact, came very close to taking out the 25,900 mark as well on the downside. But we did well to recover from the day's low. In fact, right now, as you see, the Nifty is trading down by just about 20 odd points. So a 26,000 holds, and just about 20 odd minutes to left for the day to end. So not bad, given the fact that the Nifty Bank Index has also managed to edge back in the green. But take a look at the Sensex, that's down just about 50 odd points. The good part is that the breadth of the market is now skewed in favor of gainers. Remember, when we started the day, it was 2:3, that the NSE advanced decline ratio, but it has flipped in favor of gainers, although it is 1:1, marginally in favor of gainers, but still, given the fact that the breadth was extremely poor at the start, we've done well to reverse course, and now the complexion of the market is looking much better than what it was at the start of the day. But what's really leading to this rebound? Perhaps it's value buying at lower levels. That's what I was saying in the morning as well, although global markets had red across the screen. But given the fact that we had back-to-back gains on Thursday and Friday, and experts were saying that buy on dips remains the texture of the market, there were expectations that of course, there will be some buying coming in at lower levels, and that's exactly what happened. That's why we have managed to edge back above that 26,000 level. Now look at the mid cap index, down just about 0.2%. In terms of sectors, Bank Nifty, as I mentioned, has edged back into the green. It's now trading higher by about 60 points. Look at some of the other sectors that are doing well. It's media. This pocket is hogging the limelight, given the fact that we are seeing good gains coming in on shares of a PVR. PVR, in fact, I think was up somewhere around 4% or so. Mind you, the recent release, Durandar has entered the 300 crore club, right? I think that's something that is kind of adding to the sheen when it comes to shares of PVR, which is why the Nifty Media Index is up somewhere around 2% or thereabouts. FMCG has done well to edge back into the green, showing strength, 0.6% kind of gain on the FMCG index. PSU banks as well, along with private peers, have managed to stage a good rebound. IT, remember, rupee has made a fresh record low today. Of course, that bodes well for IT. So that pocket also up 0.3%. Metals also up 0.2%, although dollar index kind of marginally picked up. But still, metals, they were the top performers last week in the wake of dollar weakness. Even though the dollar index has picked up a bit, metals have done well to stage a good comeback. So all in all, texture of the market looking much better than how we started the day. Let's see how things really pan out, in the last 15 minutes, and of course tomorrow as well. It being the Nifty weekly expiry as well. Interglobe Aviation, third straight day of gains. That stock is up 2.5%. Shriram Finance, Hindustan Unilever, Tata Consumer, ITC. So all of these consumption names doing well. Infosys, HCL Tech from the IT pack. Some other consumption names like Asian Paints are also doing well. On the flip side, ONGC, top laggard, 2% down. Some auto names are in reverse here, the likes of M&M, Eicher Motors. JSW Steel defying the general trend in the metal basket. That's down today, and so are some other stocks like Bajaj Finance, HDFC Bank, Bajaj Auto, etc. Well, all in all, that's about the market. But let me bring on board our guest for today to understand how things are looking like, or how things are going to pan out from here on. Joining me is Rajesh Bhosale of Angel One. Rajesh, lovely chatting with you this afternoon. Tell us, what do you feel? I think we were at the brink of breaking below that 25,900 as well, but we've done well to recover from the day's low. What does it look like, given the fact that tomorrow is Nifty expiry? So do you think 26,000 will hold, or do you think some bit of sell-off could come in at these levels as well?
Yeah, hi, afternoon, and thank you for having me on your show. So yeah, definitely, if we see on a closing basis, we are likely to see a flat close. But fortunately, from the morning lows, we have recovered well. In fact, if we see last Friday, there was a bullish gap around 25,900, which also coincides with its 20-day EMA. So in the morning, we can say that the price dip was to refill that gap, and we are again above the 26,000 zone. So overall, the texture of buy on dip continues. but overall the market is in a range. So one should consider buying on dip and look to book profit at higher levels. So on the lower side, 25,900 followed by 25,700, which is its 50 EMA. That is a key support for the market. Whereas on the high side, 26,200, 26,300 is the higher end. So for now, we sense index is consolidating. Consider buying on dips. Today, banking space are doing well. Bank Nifty has been performing well from the last week. It's on a verge of a breakout, and once Bank Nifty breaks above 60,000, then we can expect momentum to extend further in the near term.
Okay, since you're talking about the Nifty Bank Index, Federal Bank, that's among the top gainers on the Nifty Bank Index as well. I think there is a brokerage note as well. UBS has maintained a buy call on the stock with target price of 310. Now it expects improvement in the operating trends, and of course, it is also saying that that improvement would take place in the medium term. But between Federal Bank and Canara Bank, if one were to choose, which one would you pick, and how is the setup looking like for a Federal Bank in particular?
So both the counters are very strong. They are in a very strong uptrend since October month, Federal Bank as well as Canara Bank. But I would prefer Canara Bank. The reason being, Federal Bank is a bit in overbought zone, whereas Canara Bank has already seen a dip around its 20 EMA. RSI is forming a base around 50, and the risk reward at current levels looks more preferable at for the Canara Bank. So with a stop loss somewhere around 140, Canara Bank can be bought. In the near term, we expect a move towards 160 levels. Similarly, Federal Bank as well looks good, but I would suggest to buy on dip. If we get any dip towards 260 levels, that would be preferred for our upside targets of around 285 to 290 levels.
Okay, preference is with Canara Bank. All right, then let's shift focus and talk about some of the buzzers for today. I think Shakti Pumps is one that's featuring on the list, given the fact that the stock has rallied somewhere around 30% in just 3 sessions. Now there have been a slew of order wins. I think that's boosting sentiment around the stock. But should one change this momentum? How should one approach this up move in the stock?
So yeah, yes, in the last three sessions, we have seen a move of around 200 point. It was trading at around 550 and now it's 750. So definitely positive momentum is there. But I would suggest to add on dip because currently the prices are approaching a key resistance level that is around 780 to 800 levels. During the start of November month, we had seen a bearish gap around this level, and it also coincides with 89 EMA. So as of now, the risk reward is not favorable. It can continue to positive momentum, but buying on dip would be suggested. The 20 EMA and some kind of breakout around 720 is seen. So any dip towards 720 can be bought, and in the near term, 800, 780 to 800 would be the resistance.
Hmm. Okay, dips can be bought into on Shakti Pumps. But let's talk about Indigo in particular. The stock has, I think, been gaining for a third straight session. Of course, it has come off quite a bit. Of course, this whole crisis, that happened, that has eroded quite a bit of, market capitalization as well. But since the time it was included in the index, the stock has had a rough ride, so to say. It's been turbulent. Here onwards, what are the charts telling you for Indigo, and what should investors who have, or traders or investors who have the stock, how should they navigate this?
So yeah, I mean, if we see it was trading somewhere around 6,000 and from there it slipped towards 4,600. So it was in a highly oversold zone and it was also at a strong support. So a bounce was expected and this bounce can extend possibly towards 51, 50 to 5,200 level. So as of now, yes, expecting the bounce to extend, but somewhere around 5,200 we need to reassess the charts because there is a strong bearish gap and key retracement level of the recent fall. So as of now, yes, short trading bounce is expected. 5,200 as a next upside potential. And on the downside, if it slip back toward 4,700, again there it can be bought. So buy on dip with a possible 5200 as a immediate targets.
Okay, buy on dips. That's the view. Shriram Finance among top gainers today. Of course, reports have suggested that Mitsubishi is in final talks to invest $3.2 billion for a 20% stake in the company. The stock, of course, among the top Nifty gainers. How should one treat this up move today? And would you look at some of these other names as well, the likes of Bajaj Finance? How are these two stacked up against each other on the charts?
For Shriram Finance, I would suggest to wait for now because from the morning highs, we have seen prices easing off. In fact, it has eased from its previous swing high. So we'll wait for a confirmation. Once it crosses above 870 levels, then one can buy as a breakout. Then one can expect targets of around 920 to 930, or else wait for a dip, buy on a dip around 830, which is its 20 EMA, and 20 EMA is getting bought into. So as of now, it's in a no trading zone. Buy on dip around 830 or wait for a momentum above 870. The second counter which you asked was Bajaj Finance. So today it is trading
Hmm.
flat, but on Friday we had seen a bullish engulfing open low Marubozu candle, which is on its 50 EMA. So overall, some kind of reversal is there. With a stop loss of 990, it can be bought. Immediate targets would be around 1050, and once 1050 is crossed, then we can expect levels of around 1110.
Hmm. Okay. That's about Shriram Finance, Bajaj Finance, etc. But let's shift focus then and talk about Amber Enterprises. The stock was fairly buoyant today, and I think the last 5 odd days as well. It has seen a good 7% up move. The management has stuck to its guidance, and it has said that it will grow at somewhere around 13 to 15%. That these are the comments that they made in its analyst meet. As I was mentioning, last 1 week, the shares have given positive returns. They have seen some bit of traction, but the stock has seen a fair bit of correction as well in recent times. So, would you just call it a short-term up move, or would you say that perhaps some kind of trend reversal is taking shape, and one should look at taking positions right now?
Yeah, so some kind of trading bounce is definitely there. If we see the charts during the June month, the prices were hovering around the same levels. And after testing those levels with positive divergence on the RSI, since last week, we are seeing some positive traction. The kind of formation we are seeing, this move can extend possibly towards its 50 EMA, that is somewhere around 70 to 52 7300, but this level also considered with a bearish gap. So as of now, yes, short-term bounce can extend. 70 to 50 to 7300 seems to be the upside. If anyone is adding, needs to keep a strict stop loss. If we can see a matching lows around 6500 level. So below 6500,
Hmm.
stop loss should be kept for a targets of around 70 to 50 to 7300.
Hmm. Okay, okay. Taking note of those targets and stop losses. But what about Kaynes Tech? It did see a trading bounce over the last, 5 sessions, cumulative 5 sessions. If you see, it had a gain of 10%. Today, of course, it's down 2%, but the stock has really been hammered, right? There have been concerns about related party transactions, etc., that have been raised by a brokerage, by institutional brokerage, and the stock was punished. But how would you approach Kaynes Tech within the EMS pack?
So we spoke on Kaynes Tech last Monday as well. We spoke about the
Yeah.
observation that in last 1 year we had seen wild swings where prices from the 4000 levels have moved towards 7000 levels twice. So this pattern has been revisited in the past. In fact, last Friday, last week we had seen a hammer pattern. So for that hammer pattern to get activated, the stock need to close above 4500 4500. Once 4500 is taken out, then we can expect momentum towards 5500 to 5700 levels. So as of now, wait for prices to cross above 4500. Once that is crossed, we can expect some positive momentum in this counter.
Okay, that's about Kaynes Tech. But just about 7 minutes to go. Rajesh, any BTST ideas for our viewers?
Yeah, so we spoke that banking space are doing well, and from that space, mid cap size bankings are doing well. You highlighted Federal Bank, also same similar counter is IDFC First Bank. The stock was in a consolidation, but today we are seeing a range breakout in IDFC First Bank with a stop loss of 81. It can be bought in the near term. We are expecting targets of around 90 levels. Similarly, we are bullish on UPL. The stock was in a consolidation. It tested its key averages, and today we are seeing a strong breakout. So, with a stop loss of 747, UPL can be bought. We expect a move towards 810 in the coming sessions.
Hmm. Okay, those are the two BTST ideas from Rajesh. But Rajesh, there were quite a few volume buzzers in trade today as well, the likes of Nuvoco Vistas, KC International, TBO Tech as well. Yeah, anything that's catching your fancy out of these names?
So yeah, the Nuvoco Vista definitely strong momentum is there, and after a very long time, prices are crossing its 20 EMA. The kind of open low Marubozu formation we are seeing, this momentum can extend possibly towards 380. So one can have a positive bias. KEC International saw gap up but didn't sustain. It is facing resistance around 720 levels. In the coming session, if 720 is crossed, then we can expect a breakout that can push prices towards 770 levels. As of now, it's in a no trading zone. We would wait it for to recross 720 levels.
Okay, no trading zone for that stock. But talk about Reflex Industries as well. I think Reflex Industries, correct myself. That's surging in trade. I think it was up somewhere around 18% last time I checked. The company has clarified that the search operations by the IT department, it has clarified on that, and it has said that it has not really received any communication notice or order from the tax authorities, and that has really got the stock rallying. How would you look at that stock? Is it looking good? If somebody has these shares, should they book out? What would you advise?
So I'm not tracking this counter much, but there is kind
Hmm.
of bullish engulfing pattern that is there today. So possibly the momentum can extend in the near term. Fresh longs I wouldn't suggest, but those who are holding can hold on for targets of around 335 to 340, which is it's around 50 MA, and a stop loss of around 255 can be kept, which is its Friday's low.
Hmm. Okay, that's about Reflex. But one stock that I want to discuss and discuss with the morning guest as well. It's Hindustan Zinc. The stock has, of course, had a very, very good up move in tandem with what's been happening with silver prices. I think today silver hit 2 lakh rupees on the MCX. The stock is buoyant today as well. No not a high flyer today, but nevertheless, in the last five sessions at least, it has amassed gains of somewhere around 18%. Would you play this on the upside, or would you say it's fast approaching its overbought zone?
If you see the chart structure of last 1 year, the stock prices hasn't done anything much. But last 1 week,
Hmm.
definitely the traction is there, and from there we are seeing a 1 year long consolidation breakout. So from a short term, the stock may consolidate or may dip due to its last week move. But if we consider a bigger time frame, like for a couple of months, then the stock is poised for a further extended move, possibly towards 630 to 650 levels. So from a very short term view, one can use it as a dip. Any dip can be taken as a buying opportunity, and keep a view of around a couple of months for a positional targets of around 650.
Hmm. Okay, that's about Hindustan Zinc. What about the quick commerce players like Swiggy and Eternal? Eternal has had its bouts of selling pressure. Today it's managing to hold out, marginally so, but Swiggy as well has been in focus, right? Has raised 10,000 crores via QIP. fast catching up in terms of its uh, war chest, so to say. But comparing both the chart structures, which one would you stick to right now?
So both the counters looks good from the current levels. In fact, if we see Swiggy is trading mild negative today, but last week we saw that it gave a range breakout, and based on that range breakout, the potential target comes somewhere around 450 levels. So eternal can Swiggy can be bought with a stop loss of around 390 and targets of around 450 levels. Eternal, I mean, it's on a support. It's on a 200 DMA support, and we are seeing bullish reversal pattern. So since it's on a strong support with a stop loss of 280, which also coincide with a, bullish gap, can be bought in the near term. The stock can bounce back towards 325 to 330 levels.
Okay, that's about Swiggy and Eternal. Before I let you go, Rajesh, we spoke about BTST ideas and you shared quite a few. But anything else aside of that for a longer positional play that you would suggest? Any one or two stock?
So yeah, we already highlighted IDFC First Bank and UPL.
Hmm.
Along with that,
Hmm.
Voltas is also looking good. The stock has been in a positive traction since last week, and today there is a diamond pattern breakout. This is a very rare pattern, so possibly along in line with this pattern, the stock is poised towards 1550 levels. It can be bought with a stop loss of around 1300.
Okay, so that's another recommendations coming in from Rajesh. Stable Rajesh, with that, would like to thank you for taking out time and joining in. Always a pleasure.
Thank you.
All right, markets have shut shop for the day, and it's not a bad one, right? Given the fact that we managed to defend that 26,000 mark a day ahead of the weekly expiry. Yes, today may be volatile, but let's see whether the bulls can defend this crucial psychological level of 26,000 or not. But yes, today we've done well to defend that. We were staring at weak global cues when we started. We were staring at a 100-point down tick when we started trade, but we've done well to defy those weak cues. In fact, ending largely flattish with a negative bias, so nothing really to complain about. Mid cap index as well, although it has underperformed, but not by a wide margin. It's down just about 0.2%. And the good part is that the breadth of the market reversed in favor of gainers. So there were 1533 advances to 1346 declines on the NSC. In terms of sectors, of course, there were the likes of, FMCG that was among the top gainers. IT as well that managed to eke out gains. It was up somewhere around 0.3%. Of course, rupee hitting a fresh record low beyond 90.7. So yes, that was another contributing factor. Banks did well. The Nifty Bank Index recovered almost 400 points from the day's low. The Nifty PSU Bank Index also gaining 0.5%. And of course, the media pack also upbeat, hogging the limelight today, in the spotlight, so to say, given the fact that the latest release has done extremely well on the box office. 300 crore club. That's what Dhurandhar, the latest release, has really clocked in. But in terms of the sectors that didn't do all that well, autos down 1% in reverse gear, pharma some kind of a bitter pill there as well, 0.5% down. Real estate, energy, these were some of the other pockets that didn't do all that well. In terms of the top laggards on the index, a mix of auto and energy, and even some financial names feature on the list. So topping the losers list was ONGC, that's down 2%. M&M, Aisha Motors, Bajaj Auto, all these counters from the auto pack, in reverse here. HDFC Life, despite the fact that insurance amendment bill was cleared by the cabinet, some profit taking there. HDFC Life again lost somewhere around 1% or so. JSW Steel, Bajaj Twins were also down. HDFC Bank was also down, and even from the metals pack, the likes of Hindalco were down in trade. In terms of the gainers, what's doing well or what did well was Indigo, third day in the running that we saw some semblance of green on the stock. That stock was up 2.5%. Shriram Finance up 2%, HUL up 1.5%. Of course, all the other consumption names were in focus. The likes of Tata Consumer, ITC, they were also on gainers. Infosys, HCL Tech, from the IT pack, they are also dominating the gainers list. SBI from the PSU banking lot was up. Even Trend managed to reverse course and end the day in the green. So all in all, not a bad day, given the fact that we had a very subdued kind of a start when we saw a triple digit cut, but done well from there to claw back from the day's low and in fact end just about in the flattish zone with a 20-point cut on the Nifty and Bank Nifty. Of course, deserves mention because it managed to shut shop with green on the screen. But with that, we're completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. We'll see you with the markets tomorrow morning at 9 a.m. So don't forget to tune in then. Have a great evening and goodbye.